Welcome back to the channel. Well, we can sit and pretend that 2026 will show positive feed and real estate prices will either go up or stabilize. However, that's not the case, and it will not happen in my personal opinion, because we are dealing with so many things that are actually happening at the same time, and this is a bottleneck, ladies and gentlemen. Well, while you're at it, please subscribe to the channel and let's go into the actual data. Let's go about the mindset and what we're about to actually face in 2026. So the whole idea is going back in time and just analyzing what has happened. We all know that many have been in that fear of missing out mode for a long time, and they have been pushed into the market because the era at the time was, if you do not buy a house now, you will never ever be able to buy it or afford it ever in your life. Now we continue in the same, I would say, theme when the banks and the bank tellers and the bankers and everybody associated around that field were claiming that this now today, back in 2021 or 2 or 2020, they were saying these bank rates will never be as low as they are today. And guess what? They were right. So what is happening right now? Well, you have these folks that have purchased homes at the peak, maximum peak, and obviously we are already in a crash. We are already in a falling market for years. So what's happening actually, they are losing or lost their equity. Think about that. So they cannot exit. So the next step is basically they will have to renew their mortgage. And remember, the interest rates will never be as low as that particular period in time, which they were absolutely right. So now they have to renew in a much, much higher percentile, which definitely eats directly into their savings. It eats into their day-to-day operations, RSPs, like funds, retirement funds. It eats into their parents' funds. It eats into everything because they have to stay afloat and they have to sustain themselves, right? So what happens most of the time when the rate, which consists of obviously the actual mortgage and the interest and the principal and all of that stuff, when actually the interest starts to eat your complete principal 100%, you get into trigger rate. Then they trigger something else, right? So the banks have to be actually innovative. So then they prolong the agony, right? The amortization rate is the key. 25 years, 30 years, 35 years, 40 years. So what that does, it basically keeps locking these poor people for a long time. So imagine by calculation, think about it for a second. If you have purchased a property at 30 years old, 35 or 40 years old, and your amortization is between 30 and 40 years. So if you add these the elements together, like when are you going to pay your house off? When you're 70 or 80 years old, right? So we're dealing with that currently. People cannot get out. Those ones that have to get out, they have to pay the price. And the price is very simple. You lose your equity, you will lose your property, and you start from scratch. That's it. The other segment, the other level is you will exit, you will owe more than you have, right? You will declare bankruptcy. However, there's a difference between, let's say, United States and Canada. In the United States, in some states, once you declare bankruptcy, the bank takes your property and you walk away. That's it. You start from zero. Yeah, you have bad credit maybe. You cannot do X, Y, and Z. However, they're not tapping into your income and the potential in the future. In Canada, it's completely different, right? So from my understanding, even if you declare bankruptcy and even if there's a negative that you still owe to the bank, right, like a sum, you still are obligated. And in the future, they will go back after you until they return all of these funds back. So you're not off the hook just because you declared bankruptcy and all that stuff. So think about that. Ask professional advice. There are a bunch of lawyers out there, like a bunch of people that obviously deal with these things on a daily basis. Now, in 2026, everything seems to be coming at the same time as mentioned before, which means that people don't have a choice. That's it. And the market, by my humble opinion, will continue to decline. It will continue. Whether that's 1% down, 10% down, or 40% down, it's continuing in that direction, right? So the offset, which is not as easy as people might think because there are billions and trillions of dollars being involved, right? So they cannot just offset the market or just ignite the market. Because if we take a market, like a Canadian market as a whole, do you realize how much of a mechanism, money, situations, contracts need to come into place in order for us to see the spark in the economy, right? And when I say spark, I'm talking on all levels, in your pocket level, in your head level, the confident build up, jobs that you feel comfortable, that everything's starting to make sense and all of that stuff. So it's not just like a trigger like that and then things start, right? Even if we started today, it will probably take us years and years until we see that solid Canadian economy, the strong Canadian economy. So I would also like to add that in my humble opinion, that 2.5 decades that we have seen in the real estate economy and the real estate market, like let's say from the early 2000s and onwards, like we have seen that impossible being possible, that housing market, that Canadian housing market providing returns on yearly basis. And that's what most people are hoping and praying it comes back to. So I hope you gained some value. Please subscribe, like, share this video, and I'll see you in the next one.